Hi everybody. We've had over 1,000 conversations with prospects in 2021. Over some of these calls, we've noticed that frequently organizations have processes in O2C cycle that are broken. The failure of even one of these processes have direct impact on entire accounts receivable functions. So while we talk about impact of even one broken process in accounts receivable function, today we'll focus on understanding Collections Cloud and the problems it solves. And for that purpose, we'd like to invite Glen George to understand how you can improve the collection processes and how collection process as an individual process itself impacts the other AR functions like credit management, cash application, etc. Glen, would you like to say hi to our listeners?
I joined HighRadius just about 4 months ago as an O2C domain expert in the collections product team. I have an overall experience of about 20 years with 18 years in the O2C domain, managing and delivering operations majorly for collections, also for order management, billing and disputes. I've also been part of an O2C practice team where I was responsible to create end-to-end O2C outsourcing solution for clients.
So how does the collections as a process itself impact the other processes in order to cash cycle? Like, let's say, credit management, cash application, etc.
We have credit, master data, billing, and cash apps as the major processes that we consider under O2C in our framework. What's common between these processes in contrast to collections is that all these processes pass entries in the ERP. Well, collections is the only process that does not do that. Secondly, when you look at all these processes, the data that they consume is primarily customer information, all of which are directly related to the customer. But none of these teams talk to the customer directly. So when it comes to talking and interacting with the customers, that's clearly something only collections does within the O2C space. So let's look at each of these sub-processes and what are the basic outputs that they produce. Starting with credit. The output would be credit terms and credit limits. Master data, customer setup, contact details, billing, invoices, and more importantly, invoice quality. Cash applications, invoice clearing through valid remittances. And finally, collections through effective follow-ups. Now, how can effective collections follow-ups impact these other sub-processes? Let's start with credit. Now, on-time follow-ups and effective use of consequence management policies, collection strategies by collections would ensure that credit terms and limits are set for customers are constantly tested and revised. This ensures that the credit team creates more realistic and effective credit policies. That's the impact. Master data. By making sure that every customer is followed up, collections will end up uncovering the customers where there are no contact details. They will also discover the accuracy of the customer setup, which will lead to setting up of policies within master data to improve the customer setup and the capture process. Billing. Effective follow-up with customers by collections would result in uncovering issues with the invoice delivery and the disputes, driving root cause and trend analysis, which will again drive potential process fixes within billing. Finally, cash apps. Again, we're talking about effective follow-ups by collection, right? What will happen? It will ensure that more and more customers are paying on time and with legible and consumable remittances provided to the cash applications. Hence, improving the percentage of payment applied and reducing unapplied cash. So all in all, having an effective collections follow-up process ensures that all the other sub-processes get quality inputs and also help improve those respective processes and drive efficiencies.
Now, the next question that I have for you is to understand why a client should look at a solution which is a combination of Collections Cloud along with other products like a credit cloud or a cash application or an EIBD, and why not just singularly buy Collections Cloud?
In one of my previous roles, where I was responsible to create solutions for clients in O2C outsourcing, what I saw generally with clients is that they would ask for efficiencies and productivity improvements in O2C, and we'll go to them with an end-to-end solution with a platform. Then they would ask us to focus on collections. They would say, in their view, what they would say is that, if we can automate collections, then we save a major problem. What they don't realize, and we would need to explain this to them, that if you only focus on collections, the turnaround would happen, and the rest of the teams would not have the tools or capacity to manage the improvements that they have to make in their respective processes. Since the processes are so symbiotic, the whole automation project then becomes a white elephant, and a drag to all resources in question. If you look at an example, you implement a collections tool and find efficiencies in that process, right? You reduce the headcount there. However, due to the effective follow-ups and stringent consequence management in the collection strategy, more and more customers get credit blocked. More and more customers will require to be reviewed for their credit terms. And hence, you will need to increase the manpower in the credit team to manage that influx. Same example for cash apps, where an increase in remittance receipts and requests for unapplied payments, that would need more manpower to be added. And this would completely nullify the productivity gains that you made in collections. Because both these processes don't have the resources or policy set up to ensure this additional work is taken care of. Right? There's no automation, there's no way that the process can manage this influx. So what this means is that solving collection pain points by itself is not the best way to look at generating efficiencies within O2C. The best solution here is to implement a finance information ecosystem that helps you create and maintain an effective operating model across O2C. This is where a strong suite of O2C products like HighRadius across the O2C landscape will help, will be needed to be deployed for long-term efficiencies.
I talk about the Collections Cloud specifically, to understand how Collections Cloud can help improve productivity of an AR collection analyst, then what would you say are the 4 key areas, or maybe a few key areas that collections analysts can solve with our offering?
When you talk about the pain areas, right, for collections, according to me, there are 4 things that we need to look at. First one is one view of the AR. Second is prioritization of tasks, tracking effort and performance, and finally, portfolio coverage. When you look at each of these, starting with one view of the AR, there is a lot of effort spent by collectors to prepare and manage their portfolio on a daily basis. There could be multiple ERPs, different company codes, multiple business units that the collector would need to extract data from and monitor their AR on a daily basis. Each customer within the portfolio will have a sheet to track their invoices and their statuses, disputes, updates, P2Ps. Now, these sheets will need to be updated on a daily basis because new invoices keep coming in, invoices get paid. So you'll have to track that on a daily basis. The collector on an average spends anywhere between 15 to 20% of their time on this. Now, how does Collection Cloud impact productivity here? We take this entire task away from the collector by bringing the collector portfolio in a centralized location. The collector just logs in, sees his entire portfolio with all the updates done, dashboards that help analyze the portfolio however they want, with the flexibility of customizing how they want to see the data. Collectors can dig deeper into the accounts to review the credit information, disputes, the calls that were made. All this helps productivity by eliminating the use of multiple tools and all the manual effort. Next, you look at prioritization of tasks. Once the collector prepares this daily AR report, right, in the manual, they need to decide the priority of the daily work. Which customer I'm going to call, which are the ones that I'm going to send emails. Now, the collector manually tracks this whole thing. He'll have an Excel sheet or whatever document of who were called, which are the customers he or she followed up. Usually the collector uses their own judgment and based on experience and relationship with the customer, and then they'll decide, okay, what is the priority. Now, how does Collections Cloud solve this? A work list is generated on a daily basis, which tells the collector what tasks to perform. Collection strategies are set up within the tool, which are linked to AI-based payment date predictions to prioritize customers. It also helps identify high-risk customers with AI-based customer segmentation. The collection strategies then drive the collector's task in the form of calls or emails. Which are the customers to call or which are the customers to send emails or follow-ups. Overall, this helps the collector identify the customers that would delay their receivables and hence impact productivity, right? So they clearly know this is how I have to prioritize my task. Now next, let's look at tracking effort and performance. The performance of the collector, depending on what sort of targets are set, also needs to be tracked manually. This becomes a major issue, not just for the collector, but also for the supervisors, right? To ascertain what efforts are required to collect any target that have been set up. Therefore, every action of the collector, be it calls, email, disputes, needs to be tracked manually, right? And shared. A lot of effort is then spent on generating manual reports for stakeholders, for management, for the reviews, right? The collectors and the supervisors, both included, can spend anywhere between 25 to 30% of their time in doing this. Collections Cloud helps track this entire thing within the system, right? The number of calls that were made, number of follow-ups, the emails. It also provides visibility into the health of the portfolio. What is a bad debt? What is a DSO? What are the dollars that have been touched by the calls and emails? All of which helps in effective collection strategies, saving a huge amount of manual effort, right? Plus giving insights to supervisors and managers, which were earlier not even possible. Finally, the most important part, right? Portfolio coverage. On an average, a collector can manage anywhere between 100 to 1,000 customers, right? This depends on the complexity and different business, how the businesses are run. No matter what that count, the collectors only find time to cover 50 to 60% of their portfolio. This is why the 80-20 principle of managing collections is so prevalent. How it works is that the collector will look at their overall size in terms of value, right? Sort it from highest to lowest value. And then, the customers that make up 80% of the total AR in terms of value, and with just 20% of the customer count, that's what they'll focus on. Collections Cloud will help with smart segmentation. Now it can help improve portfolio coverage by sending automated correspondence, right, to customers for follow-up, and also enable touchless dunning for low-risk customers. So you create those segments of low risk, high risk, and then for the low risk customers, you can send out automated emails, touchless dunning. This ensures that the portfolio coverage goes all the way to 100%.
My next question is to understand that while we try to enhance collections efficiency, right? How can a CFO ensure that the customer experience is not compromised?
See, the collection team spends a lot of time talking to the end customers, and that features heavily on the overall customer experience scores, right? The basics of an AR role demands that collectors constantly follow up with their customers and ask for payment. Now, this is where a collections cloud with intelligent insights can provide the collectors way of reaching out to the right customer at the right time, and that's the important part, right? Now, segmentation of customers based on various aspects like how the customer receives their invoices. Is it by email or EDI? What is the customer's payment behavior? Is it like once a week or once a month? These are insights that can help collectors decide on which customers to call and when. Now, one of the most important changes that the collection cloud helps drive through the way of improved portfolio coverage is shifting from traditionally chasing past due invoices to following up on current invoice. And improved portfolio coverage and efficiencies within the process helps the collectors reduce past due invoices, which in turn makes for a happier customer.
Thank you so much for taking time for our conversation today. We'll be back with more for all our viewers out there. Stay tuned.